What's up, everybody? Glad to see you guys here. Joining me this Friday on the weekly close live stream. Do this every week. Going to do a little bit of a market recap, look at the positions that I put on this week. What I want to talk about this week is trading and how psychology comes into play. Because even though I've been doing this for about 10 years, yeah, this is my 10th year as a professional trader, man, I still make psychological mistakes. And I'm going to tell you guys why I did that as a way to relate to the problems that new traders face, because ultimately I put these live streams on because I want to give back. I want to share what I've come to know and trust about trading, so that people can become better traders, hopefully faster than me. But even all these years, I still make fundamental mistakes, and I want to own up to some of that. We of course got to do some market recaps. Stock market has been ripping this week, and that's sort of a mistake, but that's forgivable. I came into this week thinking, oh well, the market's going. It needs a pullback. So for the sake of being contrarian, I was looking for shorts, and actually, I had a good trade on the short side. I actually had a few good trades on the short side this week, despite it going up. But it's one of these things where you just wish you would have left something on and just done anything else, gone for a hike or not looked at it for a while. But, you know, I still smell a bear, actually. We got to talk about Bitcoin. Bitcoin definitely did something interesting this week. Every week I look at Bitcoin. I've been a Bitcoin trader for a decade as well. And I think a lot of people have gotten caught up in the recent ETF hype, and they are not paying attention to the technicals. And most Bitcoin maximalists, they don't want to look at technical analysis. They don't think it's necessary. And I have very mixed feelings about Bitcoin, and I might riff about that a little bit as well. It's hard for me to get my own prospect for the future on Bitcoin aligned because I've been so deep in it for so many years. But I'll discuss that with you guys here in a little bit. What's up, Stone Pilot and Casey? Casey, did you take any breakouts this week? How are your breakouts doing? All right, let's see here. Hey, Angie, good to see you. Happy Friday to you too. By the way, I stream this on Discord, YouTube, and TradingView. I like all those platforms. I like TradingView probably the most. I do everything in TradingView. I don't actually trade live through an account or a brokerage, but I have TradingView up. I do all my analysis in TradingView on a daily basis, and I do futures trading, and it's fast enough that I can execute trades just fine. And I'm actually let's start out by talking about um, the stock market because I'm going into the weekend short ES futures. Actually, I'll be honest, MES futures, the minis, because I'm feeling a bit of a wuss. I have a few of them, which is going to allow me to be a little bit more nimble and also not worry as the market is closed all weekend. And that's kind of the key thing that I want to talk about when we get into the psychological discussion. But the trade itself for the S&P 500, let me clean this up a little bit. I have two charts here, two profiles, and one you'll notice has RSI. I am working on not an additional system for trading, but I want a few more reasons to pull the trigger in futures trading. So I'm starting to play around with RSI price divergences, but we might go into that later. But basically, on the S&P 500, here at the end of the day, the market has been toppy for all week long. And around about Wednesday, we had that CPI news, which we knew was going to be big market mover. I was actually able to catch a short in here, but we'll talk about that here in a second. But once the highs of Wednesday were broken, I just kind of sat back and I was like, okay, if this thing's going to be bullish, it's going to be bullish. But what we got today on today's price open. If you'll notice the highlighting area, if you follow my streams, one of my indicators I made for myself, it's nothing, not secret. If you send me a message on TradingView, I'll give it to you. It's these spikes. What a spike basically is where price shoots up, breaks a resistance if it's up, or a support if it's low. Basically, it breaks a high or a low, and then the next bar closes inside the high as well as the red line, which is the Ichimoku Tenkan-sen. I like nice, simple charts. That's why I took off Ichimoku, because we don't want to be looking at everything else when we're trying to figure it out. In fact, I'm going to take off my retracements here. And so this is the price action for this morning. Notice how price on the S&P 500, where's my arrow? There we go. Price on July the 13th, that's Thursday, made a high, also a little spike there, but it's kind of in isolation. I don't really like these trending spikes because there's nothing really behind it for them to really break. But the spike today, the price action from, here's the 930 bar on the S&P futures, and here is the 10 bar. Basically, you have a false breakout where everyone thinks it's going one way and it goes the other. We'll look at those in just a second, Ellen Moy. And so when you have something like this, it basically price, swings up and then swings down, that creates what I see as an opportunity. That's basically a mismatch of traders, of market participants. Everyone thought it was going higher, but now they're getting slammed back down. And so those people that bought the breakout, what are they thinking as something goes here? Well, they're going to start getting scared. They're going to start getting stopped out. And so right at the 50% of this, battle is 4,551. And so that ends up being the entry level that the spike is indicating. The reason it has a little cross there up at the top is because it's basically just a little ATR buffer off of this high. And so, boom, that's the risk that you're going to put into it. The target, I usually try to go for the 3-to-1, which is the second one, and it needs to match up with a sensible pullback. In my case, I trust and look for 50% pullbacks and everything. Some Fibonacci traders want to use all the different ones. I can't remember them all. 38.2 and 61.8, but I try to keep it very consistent. In fact, I bet if you were to come in here and put these in, yeah, see, a pullback, if this is a top, if this is a potential double top, I can put in this much risk. If it breaks the high, it's going to keep going. But we can possibly play it all the way back down to a retrace of here. And that's what I've been looking for all week. Now, I'm not going to sit here and just keep shorting it, trying to capture it. I'm going to look for opportunity. I'm going to look for setups. And finally, here on Friday, we got it. Well, we had a few of them, but they didn't work out. But this one on Friday is one I can carry into the weekend, and we'll see what happens come next week. In the back of my mind, what I am thinking is, on average, here's a statistic for you guys. On average, the stock market undergoes 5% pullbacks in a given year. And we have had one. That 5% pullback being from February down to March, the banking crisis. Do you guys remember the banking crisis where the US dollar and all the bankings were going to fail back in March? Do you remember that? Do you remember that recession we were supposed to have? I mean, I remember. Pepperidge Farm remembers. But everyone seems to have forgotten about it by now. It's funny when things are going rip-roaring bullish as they are right now, people come out of the woodworks to talk about how good everything actually is. Whereas just a few months before, they were talking about how it's surely all going to collapse. Well, the reality is this. In the grand scheme of things, the stock market is trying to retest the all-time high. We could get there before the end of the year. I say that, and I'm a trader. I've read the Trading in the Zone by Mark Douglas, which the TLDR of that entire book is anything can happen. And so it could hit it, it could not, but it's trying to get there. It's trying to get there, much to the chagrin of the people who thought that this was going to be a continuation of 2022, 2023. But you got to think, and this is why I try to express this to people that listen, people that want to kind of get that contrarian philosophy going, is everyone assumes that the recent past will continue into the future. This has been the case in life, in all of human civilization, and in markets. I remember here in Georgia, where I live, we didn't get rain. It was in a drought for a decade during the 2000s. And finally in 2009, we had a bunch of rain and a flood. Think about what's going on in Colorado. I was just out there a few weeks ago. They've had more rain there in this year than they have recorded since I think 1890s when they started recording rainfall. And this is following all this talk of wildfires and how, this is just climate change causing that. Maybe it is, but people just assume that once things go on for a while, they're going to continue forever. And the same applies in 2021 when everyone was super bullish and, the stock market was making a new high every month. Just try to think differently than what you're hearing in the financial media. That's my message to people. But anyway, stock market has only had one -5% correction this year. I'm looking for it. Now, I'm being optimistic for it, not because I want people to, lose money. It's because I want an opportunity. I want an opportunity to buy more Tesla, but it's not giving it to me. And so doesn't mean I'm going to get, but I would like another opportunity to find some good opportunities on stocks as part of a broader market pullback before the end of the year. We're going to start getting into the August through October season. And August and October, if you're a superstitious trader, these are the months when some weird, wicked things can happen. And so I really don't want to be getting super long at this point as we're going into these last couple months of the year. I want to be long in the last quarter, November, December, for that Santa Claus rally statistically. But I'm looking for something to happen in the next few months. Maybe it won't, but I should know better now than to go on feelings, but I'm always looking for opportunity. One of the things that kind of messed me up was even that. I'll admit that. Let me flip it over. Me being contrarian actually kept me from making money this week. And that's because I've been looking for a short. But the reality is this. When we came into this week, from the June low up until the June high, from let's clean this. See, that's why I take off the levels. All right. Basically, Friday of last week when we did this live stream, we were right at the 50% retracement of this little leg up right here. And then Monday we came in, we shot below it, we actually overshot it, and then came back up in and held that level. So basically what the price of the market did, same thing happened on NASDAQ, by the way. Came down to its level and held it. It held its 50%, and then it came up and broke that high. That's if one were unemotional, if one were not looking to just go contrarian for the sake of contrarian, that's the only technical thing you need to pay attention to, was that it came down, held a pullback support, and went off of it. That was the correct way to look at price action this week. What'd you do for the first time, Angie? I didn't catch that. I've been kind of riffing a little bit. So, but as we go into the weekend, like I said, I have a setup, and we'll see how it plays out. NASDAQ seems to have been a little more bullish at times, a little more bearish at times, but their indexes are all kind of following each other. But there's a couple of other interesting things. Among my friend group, one of the things that we've been following very closely this week, and I made a post about earlier this week, was Rivian. And I think a lot of people are long Rivian, and I had a few discussions on here about that. But it has hit a critical level. Rivian has hit basically from the September 2022 high down to the low in April of this year, 2023, the 50% level is at 26.27, and it hit it earlier this week. Hit it, boom, Monday this week. And of course, I took it short then. Actually, I waited for it to kind of do this little maneuver and then pull back on Tuesday. I made this. Yeah, this was July the 11th. Yeah, so on Tuesday I took it here. As the quote goes, being early and being wrong are often indistinguishable as it came up. But we finally got an actually really legitimately good setup. Another spike, basically. A false breakout on yesterday, Thursday, came up, pierced above that high from Monday, and then closed back below it, firing off my indicator. And so if I had to do it over again, if I wasn't already in the position, the perfect entry would have been to take it at this 50% level. Remember, it's at that 50% level of the whole leg down, and then wait for this spike, this false breakout up, and then take it short at this Tinkinson level right here, this 50%. And we're going to play this thing back to about 20. Anyway, same thing, taking it down to 20 again. And so, yeah, but, you know, it's always kind of a debate in trading. If we are if we're too patient, we'll miss an opportunity. You know, here's the thing, waiting is a decision in itself. Yet you have to remember that not always when you're waiting for something are you paralyzed in fear. Oftentimes, waiting in itself is a decision. And so if you wait, you get an even better opportunity in the future at the risk of missing the opportunity entirely. That's always the problem. There have been many hits of 50% retracement levels, which is, by the way, if you follow my live streams, you know I go off that in just about everything all the time. 50% retracement levels. I can find so many examples of it. Many of them are happening today. Sometimes they just hit them and they bounce right off of them. But sometimes you also get an opportunity. Tesla, if we do a little revision here, Tesla, still long, wish I owned more. But Tesla was an example earlier this year. This was basically my call of the year. This pullback to the 50%, this gave you a nice little setup, and it actually gave a bunch of cool setups that in the future, when I put together some kind of a trading masterclass, I'm going to go back and review. But right in here, this little zone right here back in May, excellent opportunities here. So it gave you a little bit of time to think about it, but it went off of it. When it went short, also the same thing. So sometimes you get a little bit of time to look at it, but sometimes you don't. Let's keep on going. Let's keep on going here. I think things like Caterpillar. This hit a 50%. It got to my first target level this week. That's another 50% pullback right in here. This one kind of held around. Where is one where it hit it and went? MetLife did a little double bottom there at its 50%. So you had a little bit of opportunity there. Home Depot, also Target. Target I'm not too happy with. I actually cut a little bit of Target this week. Actually cut Target this week. It's not going fast enough. Where is a 50% that hit and held? I gotta think about this. Oh well. All right, the other news this week, Activision Blizzard. Yeah, I try to be not political. I really, really do. I really want to be apolitical, but really this push by politicians of a certain political persuasion to block a video game company from merging with Microsoft. Why is government getting involved in my video games? More importantly, why is government keeping my merger arbitrage trade from playing out? So anyway, Microsoft decided that it can close, a federal judge overruled the FTC this week, which finally put the merger between Microsoft and Activision back on track. It was supposed to happen last month, but now it's on track. I've closed some of my options that I took. I put on an options trade back in basically February of last year when it pulled back around to here, back in February of 2022. That way, I was confident that the deal would go through. But of course, we had to go through all this rigmarole, all this political wrangling uh, for no reason. I don't know. I as a gamer, okay, your FTC is trying to protect me from anti-competitive practices. Okay, no, I'm a gamer. I'm cool with Activision getting bought by Microsoft. Maybe they'll do better than Activision has been doing over the last few years. They're both good companies, both profitable. But let's give it another try. Doesn't threaten me in the least. Stay out of it. Anyway, should continue on. And of course they, for some reason, the FTC appealed the decision as well. Market doesn't care. Stock has continued to go up. If all goes well, this should close relatively soon at $95 a share. And basically, that's what the market is starting to price in now. But there was a lot of debate. I mean, at one point, this merger arbitrage, if you would have, how a merger arbitrage works is company Microsoft announces they're going to buy every share of Activision for $95 a share. And when they made this announcement, Activision was trading at $65. So they're basically going to buy it at a $30 premium. And so that pumped the stock up to 86 on the day that it was announced, which was here. And so basically, if you would have bought at some point in this year at, let's say, the 70s, you could have gotten a 20% return on your money. Now, last year, when interest rates were still pretty low, that didn't seem like very much. But now, it actually seems like a pretty good return. But it's gone now because you had to sit here and wait through the political wrangling, the risk that the deal would not be approved for it to finally start to flush out. But anyway, it should work out. So that's an update on this merger arbitrage. I tell you something, when this little maneuver happened in April, oof, that really hurt my P&L for the year for it to drop off from there. But we're Gucci now. All right, gold. This is a trade that I am still in. It has not really, it's given me a little cause concern. I'm short, by the way. I'm short off again, a false breakout here back in May. Sort of started to turn around right here. I'm not really going to get concerned unless we really start getting back up above 1993. So we'll keep an eye on that. Oil is still holding over its. Oh, let's fix my. Wait. Oh, there we go. Auto. There we go. Still holding. Well, it hasn't come back to test what it did in May, so it's oil still trending up. Dollar. The dollar is actually starting to fall. Dollar's given up its low, and that's a part of the stock market going up. So actually, dollar is starting to finally break its 102 level. We got to acknowledge that. So now we can say that the trend of the dollar, I can take away this little arrow right here, I no longer assume it's going to go up. It is now breaking that level. If we get one more week, next week, to close below the dollar, this thing's going to continue into the valley of risk. Yeah, they changed that, Ellen Moy. I actually just had this. It's this little polygon here. This little, what do you call a 6-sided thing? And you click on there and it's auto there. Yeah. So it used to just be a simple button, but you got to click on it there. I'm gonna look at. By the way, I'm gonna look at your questions here in just a second. I have an opinion about DWAC. But yeah, by the way, guys, if you have any symbols to look at, that's one of the reasons I do this, is to find opportunities, and I crowdsource that from people that watch. I mean, there's a lot of opportunities, especially stuff from Casey that comes in, puts in some breakouts, and I think I've actually got. Where's one of the alerts that I put from last week? Is he in here? Jeff Day called something out on Ulta. So yeah, I set alerts based on the things that you guys bring to my attention, and if I like something, I'll even take it. And next week we'll see about it. But yeah, get your questions in. I'll get to them at the kind of the last half of the live stream once I finish pontificating. So let's see. Oh, how long do I normally hold my trades? It varies between the hours of, well, basically 9:30 a.m. Eastern until noon. I and my friends, we are watching ES and Nasdaq futures, sometimes other futures, but mostly ES and Nasdaq, and we're day trading. We can be in and out in a few minutes. I like to be more of a swing trader when it comes to stocks, and so those trades may last a few days to a few weeks. The Activision Blizzard trade has been going on for more than a year. So, and I have some other trades. I think one is Turkey. This is the Turkey ETF, which this was a trade based on a weekly chart. Started December, actually, no, it was February of last year. Took some profit in January of 2023 and still have some residuals on. So the Turkey ETF, the Turkish stock market, I'm long, and this has been going on for over a year. I think also the uranium ETF is one where just kind of holding here. And MetLife is something based on a weekly chart that we put on back in May of this year, and it could go on all the way to the end of the year or beyond. So I look at setups. I look at technical setups, very simple technical setups, 50% retracement levels, and false breakouts, which can happen on any time frame and any instrument. And then depending on the time frame that they happen on, that's what my time horizon is going to be. And I'm going to have a lot of these different setups going at any one time. So to answer your question, it depends, and um, happen changes based on the time frame of which the setup occurred. So all right, let's finish. All right, so Bitcoin, gotta talk about Bitcoin. All right, so let me just clean up and let's start over here. So I probably need to make a post about this weekend. I am remiss that I didn't put it on yesterday because I've been looking for this whole year. So I've had a lot of different calls on Bitcoin this year. And so let's do a little bit of a history lesson. So earlier this year in January, Bitcoin broke out of the Ichimoku cloud back on January the 11th, and this was the signal to start the bull trend for 2023. This is after the FTX collapse debacle in November of last year, and that was a sign of a breakout. It then, upon all the banking FUD, pulled back to a what 50% retracement level back in March, and then that was the second bullish trade of this year. Now I closed that one out when it reached the high because I'm a trader. I'm not going to be aggravated if I don't catch the tippy top high. And then on my breakout, by the same rules that I got in, when it closed below the cloud, I got out of this. So this is the breakout trade, and then this was the pullback trade, and those are the true long trades of this year. Now, of course, in recent weeks, Bitcoin has gone higher. That's fine. That's fine. Not too pissed off about it. I can't catch every single little penny out there, nor would I want to. But it brings us to a super important contingency of my price action analysis, which is now we have hit the 50% retracement level of the March 2022 to November 2022 downtrend. In other words, the March where there was a little bit of hope still left in the crypto market down to utter despair, that downtrend, which also matches up with the Ichimoku cloud, but that's just because Ichimoku is based on 50%. But that level, that key level, key level is basically what it kissed, just slightly kissed it here. And let's just focus kind of on this price action. I'm gonna spend a little bit of time on this because I want to talk a little bit. So this week there's been a lot of talk about ETF filings. All these major companies, BlackRock, Fidelity, they're trying to launch these ETFs. They're trying to launch these products to get people into Bitcoin. Now, at surface level, level one thinking, that is bullish because people are going to buy it, right? More people can have access to it. And that's what people thought back in 2018. And right on the day, it was December the 18th, 2017, the 2017 bull run. That was the day that the CBOE launched Bitcoin futures. Everyone thought that was going to be a major bullish event, especially since it had been going up. People were buying Bitcoin in December at all-time highs because, oh, they're going to launch an ETF. That means other people are going to buy my Bitcoin for higher, is what they thought. And that ended up being the top. So it is in no way obvious to me that launching some sort of a retail product is going to be bullish for Bitcoin. In fact, it's just not going up. Shouldn't it be a little more bullish than this? It had this huge little run of momentum up here, and it's just stalling out. And then we hit this final resistance level right here, and we bounce right off of it. I got to be short. And I could be wrong. Where am I wrong? Well, if we break the high of this range right here, which we've slowly started pushing up on. It's really a trader's market here, and I have enough experience trading Bitcoin to not be trying to short every single one of these little highs up. Because notice if you shorted it here with a stop above your high, they took it out on the 6th of July, and if you shorted it here with a stop above this one, they took it out yesterday on Thursday. They're hunting for those stops up there, but now you actually have something going on. And I've started noticing a trend. This is very esoteric, but a lot of people in the Bitcoin space are beginning to brag about being back at break even, which makes a lot of sense. If people bought and DCA'd, all through this mess right here, and they were buying a bunch of, lows down here consistently, then now they're up to about break even versus the places they were buying it up here. And a lot are happy about that. I'm not, my gut tells me that's not a bullish sign. Of course, they're going to say differently because they want it to be a bullish sign. But it's very consistent that we're basically back at the middle, where either people that have put their hopes and dreams, their financial hopes and dreams into Bitcoin are going to be rewarded, or they're going to look back on this time and wish they had just taken the money off the table and put it into something else at maybe a lower yield, but still a good yield. What's funny is the CPI came in this week at 3%, and that's basically more or less 3% inflation, which if you would have asked somebody a year ago when we were at double-digit inflation, they would tell you would never happen again. I know many people that would say, this is going back to what I started the live stream talking about, how people assume that the recent past will continue forever. People assumed that inflation was going to be double digits, forever, because the Fed is totally impotent to get it under control, and we now live in the Weimar Republic, Zimbabwe, et cetera, et cetera, et cetera. Well, here's a contrarian idea for you. Maybe the Fed are getting it right. Maybe. I don't know. See, that's kind of anathema to say to people in financial media, isn't it? Because it's a lot more clicks for people to say, like, oh, everything's going to go to crap, everything's going to fall apart. That gets likes, shares, and subscribes. But you can get a 4.5%, maybe even higher, in a savings account now, a money market savings account, versus 3% inflation. Now, again, inflation numbers are, fudged and manipulated, whatever, but still, that's good. And it's a lot different than when we were in a 0% interest rate world where you got no return on it. Now, for taking no risk, you can get 4.5%. It kind of influences people's decisions. Do I want to buy something with huge volatility if I can just get, almost 5% return year over year? I mean, do I need that much money? Well, it depends. Depends on your goals. But we live in a different interest rate environment here. And I think just to kind of close out on the Bitcoin space, you have to remember that Bitcoin has existed since 2013. It has existed, it has been born in and lived in a 0% interest rate world all its life. That being said, Bitcoin is still an asset. As long as people hold it and believe that it has value, it does. It's scarce. You can't produce more of it. So it is a good store of wealth. But just as the last 10 years of Bitcoin history have, shown me that it can always be higher, it can always be lower. So I'll just leave it at that. All right, Amazon going well. These are my positions right now. Amazon, Caterpillar, like I said, has been doing good this year. Eastman Materials, Jen's not here, so I don't want to talk about Kroger. MetLife, 50 off of 50, doing pretty good. Norwegian Cruise Line this week, I actually started taking a little more profit on it. This is a trade back from March, and I've slowly been scaled out here a little bit, scaled out here a little bit. Still long, but I'm not going to let it overweight my portfolio. So it's been pretty good, but I don't like big swings in my portfolio. Home Depot. This was a editor's pick from a few weeks ago on their earnings. That was this little earnings spike right here back in May, and that long has been going pretty well. In fact, it this week actually got to its target. Have not taken profit yet. I'm going to try for maybe 320s. We'll see, but we'll see. So far, so good. Again, the stock market has been bullish. Everyone's a genius in a bull market. Great, but these are the ones that have been working. TFC is my choice for banks. You know how sometimes things in hindsight are obvious? When you look back and you're like, gee, I wish I would have bought that. Do you remember earlier this year when banks were going to fail, the whole financial system was going to collapse, and every bank stock was on freaking sale, offering a 6 or 7% dividend yield at the prices? I said it then, I'm saying it again. People are going to look back as like, wow, gee, all that advice about blood in the streets and, wow, why didn't I buy banks? The cheapest thing this year was banks. And guess what? They didn't actually collapse. This banking crisis where two banks with really horrible loan-to-deposit ratios failed. It turns out that was a good time to buy banks. Who could have thunk it? Target, I cut this. I don't like it. It's hanging out. I cut it before it went down here, so save myself. So Target gets taken off the list. Tesla, I'm a Tesla maxi now. Waste Management, this is just a company I've had for a long time, just so I can say that I own garbage, but I'm not really concerned about that. And like I said, Rivian is one where I am now short. Here's another thing. In addition to Rivian doing this false breakout up here, for those that follow Palantir, you really need to pay attention to the fact that it also did a false breakout yesterday on Thursday. Basically, it broke briefly the high from June and then closed back inside it. If we go to the price action here, I mean, it's basically a little consolidation pattern, but that little bar at 10 a.m. yesterday, ooh, that's important. Do not ignore that. Ignore that at your peril. I keep on talking in ifs and stuff like that. If we get a market pullback, some of these high flyers that have been enjoying this little dead cat bounce, which is what I think they are, they're going to be kind of hurting. I want Palantir to succeed. I've still got calls that expire in January, which have fortunately started to become more valuable. But oh, I just realized that I need to be doing that myself. All right, well that's an action item for next week. But Rivian is I definitely closed my position in Rivian on this, because in the case of stocks that do this, or cryptocurrencies that do this, I was actually just going back and looking at some crypto list, because a lot of people have been telling me that alts have been pumping this week, just kind of in solidarity with uh, various bullish news. Like Ripple was up, I think, 100% because of this SEC ruling, and well, now it's not. I think Solana has been pumping as well. But what ends up happening in a lot of these, you know, things, where they're crypto stocks, penny stocks, is they do these sort of little pump fakes, throughout the course of their down move, their bear trend, and then eventually you find out they end up lower. I mean, throughout the history of my live streams, people come in and they ask me, "What do you think about blah 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 coin?" And I'm pretty honest with them when I say that, look, I mean, I know a lot of people were very. What are some of the things in here? Like, let's just use Shiba Inu because it's fun to talk about. I've had a lot of spirited debates. These are short positions from back in 2021, where I was making posts here on TradingView, and people that are long them are not happy to hear someone say, "Oh, I'm short." And a lot of people just kind of hold on to these things. Yeah, see, here's a good example of one of these pump fakes. See, this is what this little pattern right here is what you have to really guard against when you're in some of these stocks that have been down and depressed. There's an emotion with bag holding, is what it's called on Wall Street Bets, where you buy something and it goes down, and you're just holding that bag, and you're not wanting to sell it, because then you would have to accept the loss. And so you just kind of hold on, hold on, hold on. And then you get this day or couple of days of hope, and you think things are going to be okay, but that actually turns out to be the opportunity you had to maybe get off a little bit better than you started. This was the case with GME, which had these kind of similar little pump fakes throughout its life. If you bought GME back around, has this split, reverse split? I thought it was like, yeah, it must have reverse split. Yeah, okay. I remember $300 was kind of the number. But, it did sort of these pump fakes. Let me turn off that indicator. Pump fakes, and then it was lower. Pump fake, lower. Pump fake, lower. And, if you bought and you kind of ignored these pump fakes, now you're down almost, 50% from those. Still, people have hope. And it's fun, but it's not really good financial decision making. And I think that's unfortunately what's going on right now with Palantir and Rivian. And I think maybe I haven't looked at this yet, but all right, let's go through. Oh, by the way, now we get into the discussion where we look at symbols. So let's if you've got things to look at, post them in the chat, and we're going to go through it, and I'm going to give you my opinion. And it's probably based on what's been going on the last few months and last few weeks and last few days, going to be of that similar variety, which is that we may, in some of these depressed names, be in a pump fake rather than the beginning of a new trend. So I'll look at them individually and we'll see. All right, let's start from the top here. I think that Lynn Moy wanted me to look at TTD. I don't know what TTD is. Let's see, the trade desk. Okay. So if we go back broadly on the weekly, we can go back all the way from the beginning. Let's go Amazon list. All right. Okay. This has been pumping, but I don't have any useful price action to tell you if it's a setup yet. Is it too late to get into these things? Yes. If I really wanted to buy something like that was doing this, what I would do is I would sit back and I would say, okay, the start back in November till here, the 50% retracement of this trend is about 65. That also matches up with this other earnings peak back in February. And also, if you notice, price did this little maneuver, which I like, came back and held it to here. If you're really, really being impatient, you can try to take a 50% of this leg up, so 82. I don't buy these kind of things. I can't be brave like Casey and buy breakouts. I like pullbacks. And it's not because I'm cheap, I am actually, but it's because so often with breakouts, you have to take on so much risk that it just doesn't fit my style. This is one of the what something like this was going on in Tesla earlier this year. And what I tried to tell people to do when Tesla was doing its own little version of a pump, back in the beginning of the year, I was like, wait until it does a 50% pullback. And everyone was like, no, Kathy Wood said that it's going to 800, it's going to quadruple. Kathy may be right, but I'm not going to go and buy it at 200 because even though while eventually I may be okay, there was a much better opportunity there at 160. So I waited patiently until it did a 50% pullback from that pump, and then I looked to be in it. It takes some patience. It takes controlling your emotions. You have to set alerts. And then you have to be willing to forego that fear when your alert triggers. And remember, hey, I wanted this a few weeks ago when it was going up because that's what my monkey brain wanted. Now my logical human brain that set the alert at the respectable level is telling me to buy it. I need to act upon that logic. The problem people come into is, when I made this post about Tesla, most people were ignoring it because it was going down. I get so many people come in the live chat and ask me about things that are way freaking up. Should I buy it? No. It's almost kind of like a meme. If people come in asking me like, should I buy something? It's usually because it's up a bunch and people want to be part of that. It shouldn't take that many times getting burned to understand why this way of trading doesn't work. You're following the crowd. The bullish news is already out there. The opportunities are when no one is looking. Hence banks earlier this year. ExxonMobil and oil, back in 2021 when EV was all the rage and oil and dirty energy was crap. You have to think about these things. When everyone's talking about something, you have to kind of take a step back and realize, okay, well, if Jim Cramer is talking about this, probably not a good buy because he's getting paid, whether the stock goes up or not, to talk about what people are talking about, which is typically what's up, which is typically not the thing you should be buying. You should be buying the things that people don't think are valuable because that's reflected in their price. All right, DWAC. DWAC was kind of a meme for me. I thought I thought Donald Trump was gonna save America, but honestly, DWAC is kind of worthless now because Twitter, once Elon bought it, I haven't heard a single person, left or right, talking about being censored on Twitter for any ideological reasons since Elon took it over. That's a win for the world. It really and truly is. Not everyone agrees with me, and they're wrong. But a lot of those people that disagree with me, that think that he ruined Twitter, now they're all, that Facebook, Meta, Zuck has come up with, its own version of Twitter. There have been some memes this week about that. Kramer was all about it, and then turns out this week not many people are actually using Zuckerberg's new platform. It's here nor there, but now you have two major players that are vying for the kind of space that DWAC is. You know what? I still own some DWAC shares. I am a bag holder. I am not gonna pretend like I'm not. We all bag hold, and pretty much I've just written it off because there's no good reason for it to exist anymore. Now that Elon has a actual free speech platform. And if you don't like where people can speak truth and you want a more curated, censored, ideologically based content, you can go over to that side and get on that platform. But unfortunately, it hurts me to say it. There's no reason for DWAC to exist or Truth Social to exist. I'm sorry. What do I think about Nicola? Well, I'll tell you this: I haven't seen a single Nicola on the road. Hey, look at this! It's another potential pump fake. Why is Nicola going up? I mean, at this point, I would ask why. So, what I think is interesting here, again, if we look at this, here you had a 50% pullback in June. You had a break of the high. Okay, that's cool. If you really, really feel like you must take it, then I would say 174. If you're a trader, you can take it, but make sure you have a stop. But again, it's just another one of these. It's hard, guys. I mean, I don't want to say that this is not the beginning of a trend, but the most probable thing that's going on right now, the highest probability is it's just another pump fake. Granted, this came from lower, but I haven't heard very much about Nicole. I thought the guy got arrested that did it. All right. Plug Power. Now, if I recall, Plug was doing um, a network of chargers, right? Well, let me tell you. I mean, again, here's another potential pump fake. Um, I don't trade on fundamentals because oftentimes fundamentals can be wrong. In other words, like frameworked opinions. But I'll tell you this. So I bought a Tesla, and I traveled from Atlanta to Denver on a road trip using just superchargers, which are free because I got 3 years of free supercharging. But the superchargers were I never had. I only problem I had was in Texas because it was over 100 degrees and it's Texas. It's big, but I still got there and I didn't run out of energy. Tesla's supercharger network is very big and expansive and well developed. It's also better than any other level 2 plugins. You can't go on a road trip without a supercharger. You can't go on a road trip on a vehicle that is not a Tesla. When I got to one of my hotels, they told me, "Oh, we have electrical charging." I went to it, and I saw that I was going to have to pay for it, and I said no. I mean, I'm not going to pay to charge. I'm so used to charging at superchargers. I'll just wait and use the Tesla supercharger. And now you have Ford and GM. They're going to use Tesla's supercharging network. And I think that Mercedes-Benz actually just said they're going to join as well. Tesla is now licensing its supercharger network to other manufacturers. So I don't know what the market share can be anymore for Plug. I will say this, though. Here's how I could be wrong about Plug. Every single I could probably do a rating system for the superchargers. Sometimes superchargers would be in this really awesome place where you can walk to different things. Just about every Buc-ee's has a supercharger. My cap's in the other room, but my girlfriend and I, we love Buc-ee's. I mean, it's awesome. And they got like a whole wall of beef jerky, brisket sandwiches. We drove half an hour to a Buc-ee's just to eat dinner the other day. But they all have superchargers, so that's good. But then there's also places where a supercharger is in the middle of freaking nowhere, or they're in the back of a parking lot where you can't even get in because it's like part of a drive-through for like a Taco Bell. So there's room for places that you can charge, possibly, and then have better things to do. There's a little bit of competition potential there, but I don't see it. I don't see it. I don't see it. But I really think in the case of, from what I'm seeing, a lot of these pumps, you needed to be getting into them in June when they were first starting, because now this week you're getting into some dangerous territory. They've just been going on for a while, and now that people are asking about them, it's kind of an indicator. of not being potentially good. But then again, I'm a contrarian. All right, PHM. And I'm going to finish all the symbols that people put in the chat, but we're coming to the end here, folks. So get them in, and we'll take a look at them. PHM, ooh, this breakout. Weren't you already in PHM? Long entry at 83. Oh, you're going to break into this. Ooh, man, that's been going up. What does Pulte do? All right, coin. You really should take my advice about coin lightly because I don't like the company. But I gotta admit, they're up, and they're up because Bitcoin is up. And so basically, an investment in Coinbase is a play. It's an extended play on crypto. If crypto is going up, if crypto is bullish, then Coinbase is going to be bullish because people are going to be using their services. So yeah, it probably has something to do with this recent bullishness that we've had over the last few weeks, and also this ETF filing. But as I said, Bitcoin hit that resistance level, and I'm not feeling bullish on crypto this week. I'm just not. DHI, another breakout, playing those breakouts. Rollins is actually a company that I've had for a very long time. They used to be that's good to see. So Rollins is something I have in a long-term portfolio. I've had it for all the way back here in the single digits, basically. It's good to be able to say, huh? Because they were a client of mine, actually. They Rollins actually they're kind of it's a family company, but they own I think Orkin, who is a pest control company. So basically, it's pest control. But I guess it's recession proof, and people want it. So yeah, that's a nice breakout of this major high at 43. So that's good. It's in my long term portfolio. I don't really look at it, but pays a dividend, and it broke its high. Good. Did the stream break again? If you are we still streaming? Did we lose anything? I think someone just said that the stream went down. Let me check. Wait, what happened? Nope. I guess you just had to refresh. Okay. Yeah, I guess mine did also disconnect on my test thing. So, all right. Let's see here. SQ. Hey, what's up, Alex? Square. Another little rally, but it's not really breaking the highs. It's hard to say now, okay? Because the market has been going up, like I said, it has been, the market is the tide, the ocean tide that lifts all the boats. You know, the waves are going to come crashing on the shore higher if the tide is higher. And the market has been ripping for this last week and for the last few weeks, all the way back basically since May, June, and July, summer months, which ironically are typically when the market doesn't move, have been some of the most bullish. I'm just very, very hesitant at this point, as someone that likes pullback trades, as someone that likes to buy things when they are at a discount, to start jumping into things just because they're going up. That's going to be my broad opinion for a lot of these things that people are, bringing to my attention right now. The time to buy stuff, as I say, is when people are not looking at it, when people are not, really excited about their gains. And the market goes through phases, and I want to catch opportunity in one of these down phases. And what I want to see is us to get another 5% correction in the stock market before the end of this year. Hopefully we'll get maybe more than one, but statistically we're going to have to get some kind of a correction. And then once that correction is kind of played out and everyone's like, oh no, we're going bearish again, that's when I'll get a lot more interested in revisiting a lot of these really bullish trending instruments. And so, that's why I try to keep a watch list of things that people have me look at. So, these are things that you really have to kind of set alerts on for pullbacks. Because if you start looking at something once it's trending on Twitter, that is oftentimes the opposite of when it's going to be a good buy. It's funny because I've thought about actually coming up with indicators based on Bitcoin chats, when the time to buy and when the time to sell is based on chatter. I remember very specifically one of my favorite Bitcoin maxi chats back in November when FTX collapsed. No one was talking about it back in November. There was no one talking in the room in November. It was little to no talk. And that was actually, ironically, a good time to buy. And now people are chattering about it. There's a lot of bullish news out there trying to get people to buy it. But yet with all that bullish news, people can't buy it. So, but then again, I'm just talking my book. I'm short the market going into the weekend. We'll see how that plays out. Thank you guys. Oh, natural gas. I'm pretty sure, I don't have a position in natural gas, but I'm pretty sure, oh yeah, so last week we looked at this from the perspective of a breakout, or I think someone came in looking at a breakout. Here's an example of why I don't particularly like breakouts. I think I drew this up for someone asking about it. Maybe it was you, Angie, because you're in here a lot. I'm sorry, my memory doesn't remember exactly who brings these to my attention. But let's take a look at this objectively. So this breakout is why, like I said, it's why I don't like breakouts, because they do this. They sometimes require you to have this big risk allotment. I think the first breakout I was eyeing it was going to be something like this. Give it a 1.5 to 1 risk reward. Hang on. And so basically you don't want to go back below the cloud here. But taking away Ichimoku and looking at it from just a 50% retracement standpoint, you had a pullback here to 2.5. If I was taking a pullback trade off of this, then I would want to see it hold this level and go back up and continue that breakout. So that it has pulled back to here does not bother me. This is actually a potential opportunity on nat gas to play this broader breakout, actually. But you need to not let it kind of get in here. You need to not let it get too far below 2.5, or else it's just going to be consolidating. But I think you're good. You got some higher lows going on and higher highs. If you want to draw that little wedge as people do, you're still in good shape. But it's just not doing what you want it to do if you're trying to play breakout. So, all right, guys. Thank you for joining me this Friday. Links are below. Join me next week. We'll see how my short works out. We'll see how the Bitcoin short works out. And yeah, my Discord's below. Come have a discussion, share your ideas, and read mine in real time. So thank you guys. Trade wisely. See you next week.